Chief Strategist for Pan-Asia Equities at BNP Paribas, joins us right now on the show from Hong Kong. Good having you, Arvind. Thanks so much for joining in. Let's start off with specific questions. In cyclicals, you like Reliance Industries and SAIL. What do you like about the business and what's your target here?
So around the region, we're expecting markets to recover, and India being one of the markets that looks best primed to recover. Certainly there are signs that the market is really nearing a bottom when we look at, I guess, fear indicators or where we are in terms of historical valuations. Now, what to buy in a market recovery? Clearly, cyclicals tend to always lead the market upwards. And in India, we are blessed with some, large cap cyclical companies, including Reliance Industries and SAIL, the steel authority. So I think, these are the obvious sort of stocks to look at, on a sort of historical valuation perspective. We have them trading well below their normal level. In the case of SAIL, it's 20% below book value. So, this is pretty compelling.
Right. You are adding positions in L&T and Tata Motors. What have been key drivers for these particular stock ideas? Tata Motors especially post the phenomenal performance the stock showed on a year-to-date basis.
So for Larsen & Toubro and Tata Motors, completely different reasons to be recommending these stocks. I mean, L&T is really out of favour with international investors. Yet, when we look at the type of growth, we're looking for 15 to 20% top-line growth, the type of ROEs the company generates, the fact that it's still the premier play on future infrastructure spending in India. We think the stock is going to regain favour over the coming 12 months. Tata Motors is quite different. I mean, this is a play upon Jaguar Land Rover. So as you know, it's a year when all things British seem to be popular, with the Queen's Jubilee, the Olympics coming up, and Jaguar Land Rover have a whole host of new models. They're really trying to broaden their product range. So I think that's the main reason to look at Tata Motors.
Do you think energy as a sector could see a pickup from here? You like ONGC at these levels? And wondering what would lead to gains in the stock from here?
Well, I think ONGC, similar to Reliance Industries, these are stocks which have actually done a round trip. So from where they were trading, when markets bottomed, they've pretty much, gone back to those levels if you, adjust for the currency. So, these types of large cap energy plays, there's only a few of them in the Asian region, and they really are a great, for investors who can only really buy into large cap stocks. There's often, limited choice for, high quality cyclical companies in Asia, and these two within the Indian market really stand out.
All right. From the auto pack, you have buys on M&M, Bajaj Auto and Hero MotoCorp. Is it a value strategy?
It's a value strategy. It fits with our regional strategy, which is to switch out of consumer staples into consumer discretionary. So the way we look at it is that India is a great example where the consumer staples companies are trading on very, very high, really bull market valuations. And, retail stocks, auto stocks trading very cheaply. Now, in times of trouble, people do prefer the stability and visibility of staples, but consumer staples in the Asian region are now trading 3 standard deviations above the long-term mean. That's a record level. And, it really is the case in the India market as well. So, in terms of growth, do staples offer more growth in the future? I think that's debatable. Over the last decade, the growth in staples has only been a little bit better than the auto sector, certainly not enough to justify such a massive premium. So all the auto stocks, the Indian auto sector is one of the favourite parts of the consumer discretionary sector that we like around the whole Asian region.
What about oil marketing companies?
Well, in theory, there could be, if prices are going up, there could be some negative impact there on demand. But I think that's not really the way the equity market looks at it. What the main concerns around India from a macro point of view is the twin deficit situation. So a reduction in fuel subsidies by the government is really one of the key catalysts we're looking for the market to recover. So obviously a petrol price hike is not such a big deal because, it's less than 10% of the fuel subsidies. But if we could see a reduction in the diesel subsidies, that I think would really show international investors that the government is trying to restore confidence in the market and, do something about stabilizing the currency and reversing the currency outflows.
Right. Some of your mid-cap ideas, and you have a buy on Indian Hotels, Petronet LNG, Anantaraj. What's the rationale for buying these stocks?
So we are overweight cyclicals, and especially in the case of the Indian market, we think cyclicals will lead a market recovery. So cyclicals, you can sort of slice it up in various ways, but stocks that are in the energy sector, material sector, industrial sector, those three, plus consumer discretionary, which would include the hotels. And looking at mid-caps, I think mid-caps can do better than large caps. So, all these stocks is a way to play a market recovery.
All right, Erwin, we leave it at that. Thanks very much for joining us.